Well, back to our top story and those colossal profits at Commonwealth Bank. Earlier, I spoke to the CEO, Ralph Norris. Ralph Norris, welcome to Lateline Business.
Good evening.
A record $5.6 billion, but very much a year of two halves.
Yes, it was very much a year of two halves. I mean, the second half, obviously, we saw a slowing, and we also saw a little bit more pressure on interest margins.
Yes, you mentioned those pressures. It's difficult to see from the market's point of view, and I guess this is why the share price is down a bit. It's difficult to see where the income growth in the banking sector is going to come from in the short term. Where will it come from?
Well, I think there's no doubt that over the next 6 months, the markets are going to be somewhat softer. I think that in the second half we will probably see a little bit more growth. Certainly we're seeing a significant increase in the number of products that customers are consolidating with us. So we expect to see a bit more revenue growth in that regard.
And what about the business sector? You've made some inroads there, haven't you?
Yes, we have. I mean, business banking has performed very well over the last 12 months, and certainly we expect that to continue. And certainly we are starting to see a bit more activity in the business banking pipeline.
You raised the issue of funding pressures at the conference, and they go to the increased cost of wholesale funding for all banks. How much of an impact could this have on results going forward? Because I know Bendigo mentioned to us earlier this week that it's this reliance on the amount of funding coming from international markets like Europe.
Well, it's a combination of factors. I mean, we've got obviously the wholesale funding is increasing in cost, and particularly on the back of the sovereign debt crisis in Europe, we saw another jump in average costs per various funding durations. But also we've seen, I think in the last 6 to 8 months, quite a lot of internal competition for domestic deposits. So that's had an impact on margins as well.
Well, indeed, NAB's Cameron Klein yesterday suggested that there is big discounting by majors across various lending areas, not just in housing. The inference there being that the big four are attacking each other's areas of relative strength. So with the cost of funding going up, will we see margins actually collapsing?
Well, I think over time there's no doubt that we do see margins contract, and certainly in the lead up to the global financial crisis. I mean, we had seen a reduction of margins of around 10 basis points per annum for a number of years. Unfortunately, we're obviously seeing a situation where the cost or risk in regard to funding has come back into the pricing mix, and that's why we're having to pay obviously higher rates for funding internationally.
How does that all translate to your view of the bank's performance this coming year?
Well, I'm positive about the bank's performance in the coming year. I think that we've got a lot of momentum in our business. There's no doubt that the focus that we've had on customer satisfaction has seen a significant improvement in our underlying performance. I mean, we've gone from being last in products per customer amongst the majors to now being number one. What that means is that customers are entrusting more of their banking with us, and as a result of that, obviously, that improves our revenue, and that's a trend that we see continuing.
That very much speaks to growth in volumes, but you've already been talking about squeezing of margins and indeed the cost of funding on the other side. I know it's an election time, but isn't really the unspoken truth, Ralph Norris, that with these pressures, you're going to at some point have to work out how to increase rates out of cycle?
Well, I think the situation has been that over the last 2.5 years, I mean, if you look at the performance of the Commonwealth Bank in regard to its standard variable rate mortgage price, we've tried very hard to balance the needs of our customers against the needs of our shareholders.
But that's going to be quite tricky going forward, isn't it? Because if we talk about the internal competition that's coming and also the squeezing on the wholesale funding side, you're going to actually have a lot of pressure on profits, and the fear is then those sell recommendations start coming out. I mean, presumably at some point you will have to look at an out-of-cycle interest rate rise. Now, is that likely to come this year?
Well, we're always monitoring our interest rate positioning, and that's something that we do on a weekly basis, and certainly we've had to obviously make those decisions throughout the crisis, and certainly our interest margin has fluctuated throughout the crisis. And certainly we obviously have to look at our input costs like any business, and therefore make decisions based around that. But at the moment, we have an interest margin that is under pressure, and as you rightly point out, something at some stage has to give.
Can I ask you about Bankwest? Because the market was very unhappy today with the fact that you took a $200 million hit below the line. Doesn't this demonstrate that CBA management has not got around the problem until now?
Well, I think the situation in regard to Bankwest was a specific problem that related to performing loans. So these loans are not loans that have gone bad or are dud loans. They're loans that indicated to us that we should look at them because we started to see a number of loans becoming impaired, which had not reached our watch list process. And so therefore we undertook a very rigorous review of all of the performing loans in the particular portfolio.
Can you say with confidence that you've now been prudent enough and we don't have to revisit this?
Well, I'm very hopeful and very confident that we won't have to revisit these unless we have a downturn, a significant downturn in the economy, and that would apply to all of our portfolio. But what we have currently in the economic environment that we have, I'm happy with the provisioning that we've made in regard to those accounts.
Ralph Norris, I thank you very much for joining us at Lateline Business.
My pleasure.